Hello, everyone, and thank you for tuning into the North Main Minute. I'm Joshua Dopey. Foundational planning question with which we're working very frequently here because the ramifications are all over the place has to do with the idea of tax planning. Now, I know it's a dirty word. Nobody likes to talk about taxes, but it's a reality of life. And so planning for those kinds of things is very, very important. First big one, especially if you're working for a company, corporation, for a larger group, and you are what we call a W-2 employee, you want to make sure that your withholdings are matching where you are in life. I'll say it from this standpoint. When you're single, there's a certain bracket for taxes. When you are married, there's a certain bracket for taxes. Perhaps you've gone through a divorce, or perhaps you're now a widow or a widower. So your taxes are going to shift as those kinds of life events happen. You want to make sure that your withholdings match that so that you don't over withhold or under withhold, unless that's your desire to do that. Which leads me to the second question. Let's say you're not a W-2 employee. Let's say you own your own business, or you're a contractor, you're sometimes called a 1099 employee. You want to make sure that your tax planning on an annual basis reflects what you anticipate your income is going to be. Let me say it this way. If you need to make quarterly payments relative to your overall tax structure, if you're a business owner or if you are a 1099 style contractor, you want to make sure that your quarterly payments are set up so that you don't have interest and penalties that could come from the IRS because you didn't do that along the way during the year. Everybody's situation is unique, so these are definitely not blanket principles, but definitely some things that you want to keep in mind. And the third big item, and I think this is implied with all that we're talking about here, make sure there are no surprises. Nobody likes surprises, generally speaking, when they're in the form of a bill or an unexpected obligation. So you don't want to get all the way to filing your taxes, figure out that you owe a whole bunch of money to the IRS that you didn't anticipate or for which you didn't plan. So make sure that you're taking the steps to do that along the way so that you mitigate the possibilities for those surprises in the future. If you'd like to reach out to us at North Main Financial Group to take a look perhaps at your overall picture, including your tax scenario, to make sure you're being tax efficient with the kinds of things that you're doing, we'd love to hear from you, northmainfinancial.com.